Markets shrug off a disappointing downward revision in first quarter U.S. growth, and the slump in gold prices deepens. I'm Rebecca Darsh from the Market Access Center here at the New York Stock Exchange, and this is your MacDesk Flow Report for June 26th. We are up 138 points in the Dow, that's just about 15 points in the S&P, with commodity stocks the only real laggards in today's market. The move higher marks the return of a dynamic that has been in place ever since the Fed began its open-ended quantitative easing strategy, that being weak economy, Bernanke put. This morning's third and final read on Q1 GDP here in the U.S. was revised lower to 1.8%. The second prior reading came in at 2.4%, and analysts by and large were looking for no change, so this was a significant downward revision. But again, one that has kept market participants today looking for a continued hand from the Fed. Looking at the action on overseas markets overnight, major markets in China and Japan closed slightly in the red. Today's fractionally lower close for the Shanghai index, marking a sixth straight down day for that market. Although it is worth noting, in light of the incredible volatility in China's repo market over the past week, that the price of one-year China interest rate swaps came down by 16 basis points to just over 3.9% this morning. This after setting an all-time high above 5% last week on mounting fears of a cash crunch in China's financial sector. The Nikkei closed 1% lower, with technology, particularly semis and hardware names, along with healthcare equipment makers leading the declines. On the ratings front, Fitch cut its growth estimates for the BRICS space this morning, cutting its forecast for China from 8% full-year growth to 7.5%. European stocks closed in positive territory, helped along by a better-than-expected German consumer confidence number, as well as comments delivered by ECB President Mario Draghi. Speaking before the French National Assembly earlier today, Draghi said that the ECB's monetary policy will remain accommodative for the foreseeable future. Similar comments were delivered later in the day by two separate members of the ECB's executive board and a member of the governing council. That was consensus enough to push European stocks to their biggest two-day gain in nearly a year. Today's big market story has been coming out of the commodity space, with gold prices dropping $40 today and brushing close to three-year lows. Activity in the gold index ETFs, notably GLD and tickers GDX and XME, which track the miners, has been heavy today. In the option markets, activity in these tickers has included a great deal of call activity, particularly on the part of investors with up to a 6-month trade horizon, suggesting that there is some anticipation of a rebound in gold prices, or at least sufficient demand for hedges against such a rebound. We're heading into a holiday-shortened week here in New York, but the data drumbeat continues next week with key interest rate decisions from Europe and a heavy week of jobs data here in June, here in the U.S. Let's take a look at the global macro calendar for the week ahead. Next Monday, we'll open the book on July data with a look back at Australia's commodity price index for June. Japan will release official reserve assets and vehicle sales. We've got a string of June PMI manufacturing numbers from Italy, France, Germany, the UK, and the Eurozone, along with June consumer inflation estimates for the Eurozone and May unemployment numbers. The UK will release some May consumer credit and lending data, and the US will release a final read on June PMI, June ISM, and May construction spending. On Tuesday, we've got the RBA's cash target due from Australia, Japan's June monetary base and May labor cash earnings. Just a couple of data points are due out of Europe, these being May Eurozone PPI and June construction sector PMI from the UK, while the US session will include the June ISM New York Economic Index, May factory orders, and June auto sales, along with our lone earnings report of the week, Constellation Brands, ticker STZ. At midweek, China is set to release its June non-manufacturing PMI. Australia will release May trade balance and some retail sales numbers. We've got June PMI services numbers from across Europe, along with May retail sales from the Eurozone. And while it's an early close for U.S. stocks at 1 p.m., there's a heavy slate of pre-market releases, including the first key reads on the June jobs market. We'll get weekly mortgage applications, June challenger job cuts, the ADP employment change, May trade balance, weekly jobless claims, June ISM non-manufacturing, and a consumer outlook index. Again, we are closed on July 4th for the Independence Day holiday, but it's going to be a busy day overseas. Japan will release weekly foreign and domestic stock and bond buying. We've got a pair of key rate decisions from the ECB and the Bank of England. Additionally, Italy will report its Q1 debt to GDP ratio. And to finish the holiday-shortened week, we'll be looking at trade balance data from Malaysia and France, May coincident and leading index reads from Japan, factory orders from Germany, a wave of June employment data points from Canada, and here in the U.S., eyes will be glued to the futures at 8:30 with the release of June non-farm payrolls. We are coming off of a prior positive change of 175,000. Current consensus is looking for 167,000 new payrolls added for June. We'll be following the market action as it happens here on the trading floor. So check us out in 2 weeks after the Independence Day holiday for the next MacDesk Floor Report.